Good morning, everybody. Hey, welcome to Thursday, July 30th. Man, can you believe it? Tomorrow is the last day of July. Even with all the COVID stuff going on, this year seems to be flying by so fast. Hey, I'm glad you joined me today as we get ready to talk to Dave here in just a moment. Yesterday, not a bad day. Today, not looking so good as we get ready to start the morning. So I'm sure Dave's going to have a little commentary. We got unemployment coming out this morning. So a lot of good things we need to talk about, and we'll just have to see how everything shapes up. Thanks for joining us. We'll be right back with Dave.
As magic there, it's morning, Dave. It's 8:40 now, 20 before 9. Let's check in on your money and find out how Wall Street's treating your retirement funds this morning, shall we? I hate to be a tease, but not too hot so far this morning, and we'll tell you why. With a little help from downtown Sebring, where Statler Financial Services' own Phillip Statler is standing by. Phillip, good morning. How you doing today?
Good morning, Dave. Hey, doing well today. Coming to you from my home office this morning as we get started for the day. You know what? Today is July 30th. Can you believe July is almost gone?
You know, we've been making fun, obviously. The second quarter has felt like it's taken about 10 years as we worked our way through this virus. But doggone it all, July's gone awful darn fast. 2 more days left in the month, and then we're done.
Yep, that's it, man. But, hey, you know what? The market's not appreciating today too well.
No, and it's pretty much all red ink numbers we got out of the federal government. The one thing that we were really looking forward to this week that was going to be an earth-shaking number was the first look at the second quarter gross domestic product. And ladies and gentlemen, I can now officially tell you we are in a recession. If anybody was surprised by that, well, you better crawl out of the rabbit hole you've been living in. But Lordy, what a drop. 32.9% annualized dip in the gross domestic product. Nobody's ever seen a dip like that in one quarter before.
No, that's one of those records you don't like to set, but it is a record. Now, let's just put a little bit of positivity to it, Dave. It wasn't as bad as what the analysts and the economists thought it was going to be. They expected it to be almost 35% decline. So a little bit better than expected.
Well, thanks, Evan. For small, it was Armageddon, but it could have been worse. Just for the sake of comparison, I've got a chart sitting in front of me here of the last 2 big dips that everybody knows about, the Great Recession back from 12 years ago and the Great Depression. In the first quarter of the Great Depression, we didn't go down as bad as we did in the second quarter first look in 2020. And our decline in this quarter just absolutely dwarfs the worst quarter that we had during the Great Recession 12 years ago. This was just absolutely no fun. The government report did say that their expectation is for a substantial increase in the third quarter. They do not expect 3 quarters in a row of contraction. But, Lordy, when you start looking at the economy decreasing by like 1/3, you got to sit up and take notice, don't you?
Yeah, that's a pretty substantial decline in our gross domestic product, definitely. And you're right, it is. Now, my article didn't bring up the actual depression, except for unemployment numbers. They said the previous low water mark was a slide of 10% back in 1958.
Okay. I have a chart here for the quarterly changes in the GDP on these 3 events, and it looks like our quarter 2 projected GDP drop is about 1% or 2 worse than the first quarter of the Great Depression. It looks like there's not a precise number, but Lordy gosh almighty, that gives you perspective, doesn't it?
Yeah, it really does. It really does. And so, you and I, we keep looking for good news somewhere. I don't know, maybe jobs is where the good news is coming from. I mean, last week it was kind of a little bit of a miss, right? We didn't quite come in where we wanted to. But this week, we are basically, I would call it, in line with what expectations were. Now, it was still an increase. We came out with 1.43, I think, million. and the expectation is 1.45 million. So I mean, I call that's wiggle room there. So basically in line with expectations when it comes to jobs, still bigger than what it has been previously to last week and this week.
Yeah, basically the best spin we can put on the economic reports from this morning is they're less crappy than people expected them to be, right?
Exactly, and maybe that's a good thing.
I guess so. Other data that comes out of the government data dump, because at the end of the month they give us just about everything that counts. Consumer spending during the second quarter, first look at that, down 34.6%, which isn't much of a surprise given the fact that for most of the second quarter, half the country was locked down. But again, more than 1/3 drop in consumer spending. And that means business fixed purchases, the big capital purchases from business during the quarter, that was also down by 29+%. It's just pretty much a sea of red ink on the macro stuff that comes out of the government this morning, isn't it?
It is, and those numbers, Dave, really and truly is kind of what you'd expect given the GDP number, right? So all that kind of matches up with what we're seeing with the GDP.
It just kind of means that, yeah, when we see the second and the third look at the GDP, it probably isn't going to be a whole heck of a lot better than that, because the components of it are pretty much confirming that things really sucked during the second quarter, as if anybody's surprised, right?
That's right. That's right. So let's see if the third quarter can suck less than the second quarter.
I got you covered there. Hey, it was an up day on Wall Street yesterday. Dow was up by 160. NASDAQ had a nice recovery again, up 141. And the Standard & Poor's was up by 40. Needless to say, there's shock value coming out of the government data today. It is earnings season, though, and you were telling me before we went on the air that pretty much we've got all good news as far as the earnings reports are concerned.
At least the stuff that's on my tip sheet this morning, Dave, I can't find a miss, which I guess is a good thing. Obviously, I mean, one of the things, that kind of caveat I put out there is that, with everything that's going on, the analysts, they don't give you in the reports that I get the kind of the summaries, doesn't go back and look at last year compared to this year, because that's where most of the differences are going to be in terms of, being off from where they were last year. But we've got a lot of household names today. There's a staple company, Procter & Gamble, with consumer staples. They came in 15 cents ahead of estimates. Revenue was ahead of forecast. Also, they had 6% rise in organic sales, which is always a good thing for a company like that. And they're, they benefit, right, from all the different pandemic issues that we had, cleaning supplies to food consumption. So they're trading up about 1.5% this morning.
Good news. Yeah, there are some businesses, it needs to be said, that actually benefit during times like this, not necessarily for the best reasons possible, but Procter & Gamble is a little bit like the pizza joints. You kind of expect them to do better during times like this, right?
Exactly. So let's go with my biggest winner of the day, at least in my opinion. The United Parcel, UPS, they almost doubled what was expected. They missed doubling it by a penny. They came in at $2.13 a share, expected to come in at $1.07. Revenue obviously was above forecast as well. They're just one of those companies that's benefiting from this coronavirus, and they're trading up right now, Dave, almost 10.5% this morning.
I was looking at them at the top of my big winner list, and I hadn't seen a report, but I just assumed a big move like that generally means that they reported good news. And again, during the pandemic time when there was a lot of shutdowns, a lot of stores closed, a lot of people were just mail ordering stuff in, even if it was from Wally World. Well, there's UPS, Johnny on the spot. They benefited.
Yep. It'll be a new 52-week high, substantially new 52-week high this morning, too.
Cool.
Yep. So we got Comcast, NBC Universal, CNBC, the parent company of all those different things. They had a good quarter. They beat by 14 cents a share. Comcast, they're in the entertainment business, but their broadband is really what was the strength of their quarter this time, which is kind of what you expect. People working from home, you need that internet connection, and you need the fastest one you can get. So, a lot of people, I'm sure, were upgrading when it comes to that type of stuff. They were up 2.5% this morning before the market opens up.
I'm going to have to talk to them about that rate increase they hit me with last month. Doesn't sound like they need it.
Yeah, really, exactly. It doesn't. Yesterday we had, I think it was Anthem reported. Today we have Cigna. They do a lot of health insurance. They beat also by probably 60 cents a share or so. And so they're trading up today a little over 0.5%.
You really are full of Mary Sunshine.
I know. I mean, it's like I can't find anything negative in the earnings reports today. Dunkin' Donuts even. They came in a penny ahead of estimates. Revenue was above expectations. Now, I did see for them, their revenue was off 20% from the same quarter last year. That was kind of a headline that popped out somewhere. But still, they had a good quarter. From that standpoint. Now they are down today. They're down almost 2% this morning, basically giving back what they were up yesterday.
Okay, that's it. It's kind of one of those days, and it needs to be said for perspective's sake. Most of these companies, with the exceptions of the ones you've noted, the companies that are beating expectations, very often it's off of lower revenue expectations with exceptions, right?
Absolutely. You're so right. Yesterday we had Visa. I think it was yesterday. Today we have PayPal. And are they in the exact same business? No, but they're very similar, right? They're both in the credit card type business, loan and money, transactional. So they beat by 19 cents a share. Revenue came in above forecast. Again, that's one of those indications from COVID-19 that they benefited from people staying at home and purchasing stuff online. They're trading up a little over 4.25% this morning after being up almost 5% yesterday, and they will open at a new 52-week high also.
Cool. Time for one more before we have to wrap it up.
Well, let's see. Let's go to Generac. Generac is popular down here in Florida as people continue to put in whole house generators, right? And so they benefited from people being at home and deciding, hey, I need to do something. Let's upgrade our house. Let's put in a generator. They beat by, they were getting close to doubling theirs too in terms of their earnings per share. Revenue was above forecast. So they had a really good quarter. Plus, it was a quarter before hurricane season, right? So people last minute wanting to go ahead and get those generators put in. They're trading up almost 3.5% this morning.
Not bad at all. Once again, up day yesterday on Wall Street and all the indexes, including NASDAQ, up by over 1.33%. After shock value from the government and some good news on the earnings, how are we doing 45 minutes early, Phillip?
Dave, you would think, with all the good news I talked about from earnings season, that we would be starting off the day in a green ink.
Now, that darn crashing economy just messes things up every day, doesn't it?
It does. We are drastically in the red. We've got everything down almost 1% or more. The Dow's down right at 1%. The S&P 500's, it's down right at 1% right now, and the NASDAQ's down 1%. So that seems to be the theme this morning as we get ready to open up in those areas. And we have the commodities area all red this morning too. Not sure. Doesn't make a lot of sense from that standpoint, but we got silver giving up 4.5% this morning, down 23.24 an ounce. We've got gold giving up 0.5% this morning, and then we've got crude oil down 1.8% to $40.53 a barrel, which is pretty much in line with where it was yesterday, I think.
Yeah, pretty close, I think. I've got red ink across the board as far as overseas markets, too. Asia anticipated our bad news, and they were off fractionally. Europe saw our news, and they're down by 1.8 and 2.75%, depending upon which exchange you're after. Phillip, is one of those poster children reasons why stability counts in one's employment and in one's retirement account. How do I find you to find that stability?
And then give us a call at 863-382 0037. We see what's happening, right? We got 2 quarters to the downside. What will this quarter leave us to believe? And that will be the key. So it's time to get a second opinion before that really starts to kick in. Follow us on Facebook, Statler Financial Services, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on your favorite talk radio station, Highlands News Talk 730.
Which is also on the web at News Talk 730 a.m. if you want to catch our political debates, because we're archiving them there too. Phillip, thank you so much. We'll catch you in the morning, all right?
All right, man. You have a great day.
Thank you very much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, guys, again, I want to thank you for joining us today. As we close out this morning, we see the futures continuing to fall this morning, now a little over 1%. So it is a great time to get an analysis of your current portfolio to make sure that it lines up with your retirement goals. Give me a call at 863-382-0037. Have a great day. I look forward to speaking to you again tomorrow.